The asset is approaching some critical targets, and it appears as though there are certain signals popping up that may indicate reversal. We're going to find out if our eyes are deceiving us or if this asset is truly preparing an explosion from beneath everyone in silence and in disguise of a potential bear trap. Welcome back to the channel on this happy Monday. This is ARCa. Let's dive into ticker symbol GTII. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol GTII, and what we're observing here is the 8-hour chart, and this is how it all started, right? So I am looking at GTII in the 8-hour chart, right? And I'm getting some requests too to take a look at it, right? Some from the GTII analysts in the Discord, right? And actually from some of my master students as well, right? So they are definitely giving us some I don't want to say it, I don't want to say like asking for my opinion. I don't think I want to disguise it as that, right? I think I want to more say it like in the lines of like they want to just see what I'm seeing, and maybe it can rhyme with whatever they're observing as well. So please make sure to come by to the Discord and give away some love, and definitely give Rhino some love, right? As he is one of the ARCa Bulls analysts, and he has been providing some important information regarding GTII's charts. Okay, team. So yeah, that is currently what we're about to do here. And so yeah, like I said, it started off with a GTII 8-hour chart here, and I did notice that we are in a massive falling wedge. Okay, so this falling wedge is also practicing the golden rule of three, right? So, and the golden rule of three just usually states that we have a resistance touch, right? Three touches before a capitulation, right? So in this case, test number 4 failed, but test number 4 or test number 5 are true breakout tests. So that's already one sign, right? It's already one sign. Another sign is that we're currently slowing down the rate of loss, right? So now we're in this chop box, right? Just like let me just go ahead and put it down. Just like this, right? So now we're in this chop zone where we haven't actually done it for this long for a while, right? Everything has actually been either a quick upside or quick downside here, but consolidating within a certain chop zone here. It's getting to one of those iterations to where we chopped around for quite a while before continuing on to an upside move, like here, right before we got this upside thrust. Now, I'm not sure if this can be paired, right? It's just I noticed that we had a quick drop in a recovery, large candles, and then we started consolidating. So we had a quick drop here, recovery, and then we were getting a bunch of chop around, right? So I'm kind of looking at it as that iteration here, and it could be in line with some potential bounce. I guess it, yeah. I don't want to say reversal, right? Because it may just be a bounce. I'm not sure. I'm not sure what it is, right? This ticker has the volatility to really expand here, right? So please go ahead and notice the volume profile within this area here, right? So this was among some of the lower reads that we had in volume right down here, right? And I want you to notice here too that this is among some of the lower reads of volume that we have within this chop area here. So that's already indicative of a potential run up, right? So now, what else could we be looking at as a hint? The apex of the triangle. So usually this formation or triangle formations tend to break out or break down when they approach 65 to 75% to the apex of the triangle, right? And we're currently there. That is absolutely, it's definitely in the question here, right? That we're definitely within that realm, and that already could give us a higher probability for bounce. Okay, so I started observing other metrics since we were so close here, and I'm getting that signal there too. And also that 50-cent bottom just is kind of it just doesn't want to let go, right? So I drew a fib here just to see if we had any relevance to that 50-cent zone. And in fact, we do, right? The 1.272 inverse fib at 50 cents is directly the support here. And you can see that the low that the price action reached is directly that 50 cent as well. So fibs are suggesting some pretty confluent targets here. And you guys already know that 45.47, I believe, was the very low. And if we can look at the OHLC up there, the low is actually 45.50. Right, so 45.50 is paired really nicely with the two spot 272 at 45.64. So I'm just pointing those out there. I just want to point that out there because it is pretty tight in the in the visual spectrum here within targets using geometrics and using psychology as well. Right. So of course we can always speculate, right, the potential breakout targets, right? So let's just say that we were to break out here somewhere December 13th or something. Wild guess, right? This has no back test or anything, right? So that would be one of the targets to look at, right? The center of the triangle would be another target to look at. That's arguably right here. So you check a trend line from the top side of the formation to the bottom side, and then the top side formation or the psychological take profit price objective is from the back of the triangle, right? So let's go ahead and apply all of those, right? So this would be from the breakout area, right? So let's just go ahead and kind of move it over there. Let's put it from that breakout zone and suggest this to be right around that same place. And then this one too. We'll leave it right at that breakout area that we presume this to be. Right, so we have a target of about 83.01, followed by a target that's 106, and eventually a target that has 172 from the psychological take profits from this formation. That's just typically how to trade it, right? And do know that it could also be traded to the downside. Now, if you have been following my channel for a while, then you'll know that I usually say that I find the best entries at invalidation zones. So the invalidation zone, aka the biggest supply that this entire range that started let's see, around February 2021, the invalidation zone here is located right about here. That's that 4309 zone. Okay, so that means that that means that we're super close to demand right now, right? So I mean, we're in it. I mean, let's just say it like that. We're definitely within demand, and the heaviest point of demand too that this current range has to offer. Definitely multi-year now, a couple years at least. So yeah, so I think that's already a bunch of signals that could be introducing the potential of an upside overdue here. Okay, so now let's look at the next metric here, right? So don't mind the charts. Actually, it's not about the charts. It's about the volatility versus momentum, right? So this is volatility here represented by this indicator BBWP in a linear fashion, and this is stochastic momentum. So a few videos ago, right? I'm not releasing GTII too much, but a few videos ago, I definitely made a regression right here, right? So a trend line regression rejection right down here. And notice how in the 8 hour time frame, stochastic momentum is actually approaching that regression and it's already correcting towards a potential upside, right? So what I started doing was I was going to run a back test on this and see if there could be something along the lines of that. Now, I'm going to be honest with you. This is actually the back test in progress. It's actually 81 iterations. That's going to take a long time to actually do by hand, right? So definitely don't really have the time for that, but we actually could see the validity of the signal happening before our eyes, right? So that's already another signal stacking. Okay, so now let's move on and take a look at the other signals. This is a very, very curious signal that I'm popping up here. This is the monthly chart, right? We had a bearish engulfing here. Price action continued to the downside, but I just want you to focus on how we have a massive amount of declining volume as price action just declines alongside the volume's profile too. Notice that volume right here, right? Huge declining volume with declining price action that usually indicates a weakness towards that downside, right? So another thing that we can observe is that for the first time since, let's see, yeah, I would say for the first time since June 2023. Yeah, damn. So probably a half a year already. The good 5 6 months. This is the first time we've had a pivot towards the upside on the accumulation distribution indicator, right? So we're already showing that potential upside pivot here, and it is a pretty aggressive one at that, right? I mean, you can see right here that we ended up getting a pretty nice pivot right about here, right? We still, obviously, right? We still continue to the downside, but those pivots eventually led to the move that, GTII got to around $9, right? So I just want to kind of put some weight here on the fact that this pivot is absolutely more exponential than this pivot here, right? So that's absolutely stronger and way beyond historical accumulation distribution metrics, right? So way down there, and with a huge pivot. So let's see how the asset behaves in the coming sessions, right? So now let's go ahead and take a look at this chart here, because this was the ascending channel that I talked about for a few times here, a while, if you do remember the charts, right? I want you to notice that, yes, price action did fall outside of the channel here, right? But that doesn't really mean that it's over. In fact, we just started the monthly candle here, and this candle still has exposure inside of the channel. So that means that we're still not closing any monthly iterations beneath the support regression here from that ascending channel, which is a pretty good sign, right? So we also drew here a support zone of 48.99 to 73.86 way long ago, and we're within that now. We're within that support now, right? In case price action continues to the downside, we already spoke about that 45.68, right? So what I'm saying here is that since we're getting such a huge diminishing in volume, and also price action kind of dropping here, candles from really large to getting smaller and smaller, this could also be preparing a bear trap, right? Because in reality, this play would lead to a magnificent downside. I mean, it would just be extraordinary. Let's say that this was the breakout candle. That downside target would literally be 3 cents, 3.59, right? So just to put it to you like that, right? But notice the shift that we're getting in volatility in the 8-hour time frame. Notice that the monthly time frame is approaching this critical support. Notice the 8-hour time frame. I mean, this has been going on since February 2023, right? So this massive falling wedge approaching the 75% to the apex, and also the rejection here on volatility in the 8-hour time frame with expanding volatility. So that's oh, and one more thing. Yes, I'm so happy that I remembered to show you this. Quickly, actually, you know what? Quickly, before we continue here, because this is critically important, please make sure to reserve your seats for the ARC Masters Trading course, and that is the 16-week mentorship that I have offered. Right, so go ahead and send me an email at arcmasterscourse@gmail.com, and I'll go ahead and get you the pertinent information, right? Like the syllabus, the disclaimer, and all that good stuff. This is going to be the last time I do this, team. I really need to get my trading going on. And I promised a few people that I would continue it, but honestly, it was supposed to be only track 1 and 2. Right, there are 30 seats each, and I'm already starting. We already started track number 3, and I squeezed in as many as I could. I think it was around 35 to 36 people in that one, and the seats are already starting to get taken for the last 30, literally for the last 30 that I will ever do a course for, right? So that's due to start in January. But yeah, go ahead and get in touch with me for the 16-week mentorship, and we'll go ahead and get you enrolled. Okay, team. So let's now continue on with this. So I want you to take a look at this 30-minute time frame. I want you to see just how much contraction there is. Right, contraction being that we haven't really traded many shares at all, and we're at critical within the 15% of contraction, right? So here we are in the 30-minute. This is the hourly time frame in critical contraction as well. Bi-hourly time frame is just exiting critical contraction, but we have the moving average here, so very, very likely it's going to dive right back in. 3-hour time frame is coming out of contraction here. Let's see the 4-hour time frame. It is within contraction, trying to get out of it. 6-hour time frame is just getting out of contraction. 8-hour time frame is trying to get out of contraction. 12-hour time frame is well within. This is the highest amount of contraction that I've seen here, back to back to back to back, historically speaking. So usually when you get massive signals like this, right, and increasing in contraction, this is set to make a move, and the move would, uh, be either to the upside or to the downside in epic proportions here, right? So let's go ahead and take a look at the daily time frame as well. Huge back-to-back iterations of massive contraction here by daily time frame, entering its contraction and its critical zones down there. 3-day time frame entering the critical contraction zone as well. 5-day time frame is just exiting that critical contraction. So this is what I'm trying to say, that, and look at this, the weekly time frame coming out of contraction as well, bi-weekly coming out of contraction, like all of this, team, when you observe multiple time frames of this downside here, of this contraction level, that usually represents a potential powerful move, very, very powerful move to come in, right? So another thing is, and this is the last note that I can put here for the stochastic momentum, take a look at where we are presently and where we have reversed, historically speaking, right? So this right here, this is the $9 run, right? So we can actually see it right over here. Sorry, this was the $9 run here. This run was actually the run that we got. It's a lot bigger, actually. That run was from 1 cent to $4 to $5. Okay, that was this run right here. Now this run down here, right, where we were sitting here, that was from about 1 cent, and that led price action to 50 cents to where we are now. Curious, right? And then this first run up here, right? This one came from, oh man, that was 2 zeros and 2 6, all the way up to 78 cents. So yeah, historical explosions have happened from the point where we are currently sitting, or where we're about to touch, right, team? So please remember that I mean well here, right? I'm not trying to spread some FUD. I'm not trying to spread any weirdness around. I'm just trying to kind of show what I'm seeing here, and what I'm seeing here could be the preparation for a pretty huge explosion. I don't know if there's anything to look out for, fundamentally speaking. I have no idea. Right, so I'm gonna let you tell me in the comments below. But please remember to reserve your seat at the ArcMasters course at gmail.com. Okay, team. And I think that should be it for this video. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, never. I need you to do your own due diligence, and everything will be cool. But with that said, I wish you well a very, very good rest of your night, and I will catch you at the bell mañana. Adios.